Hello, welcome to Spy Money. I'm going to show you our newest and best, in my opinion, indicator that I have made, and it works off of several things. There's a lot of alerts and everything. It's called Spy Money Angular, and I think you're really going to like this one. I have been trading it for the last week and making actually quite a bit on it. So it's done really well for me, and I'm going to show you how it works. There's a lot of different things you can do with it. So let's get started and take a look at it and see what you think, and let you be the decision maker on this to see if it's actually going to work in your arsenal of tools. So right here it is. This is the way I have it set up, and you can change it in different ways. But the way this works is it works off the angle of the moving average that you choose. Now, I'm not going to show the settings in the back, but I'm going to tell you how it works. And when you lease this indicator, you will be able to change the settings according to what you want. And I also have a tutorial that shows you how to utilize it to the best of its ability. So let's just talk about what it's doing. So we have color bars right here. And then we have our background color changes. So, and we can adjust the opacity of that in order to make it brighter or darker. We can change all these colors as well. There's also arrows for visual to let you know what to do. And there's three different colors on here. So we have green. I have the default is blue, but on mine I have mine as green, and that is a long position. And there's a green arrow pointing up. If you have a red arrow, that is a short, so you're down. But what is the orange? So let's find one that's got more orange to it so you can really see more of how that will work. Let's go back through the histogram here. There's not a lot of orange on the 40 range, which is what I'm using. I like it really well. I guess I'll just use this one right here. So the way this works is if you see orange, you don't get in a trade. This is in chop right here. So we had this is what, almost 3 o'clock in the afternoon, Eastern time. We had an entry here. It was a bad entry, but we're in a short coming down. So usually when you have this, you usually just take the direction to help you out. But on the orange, when the orange happens, it is in a chop area. And I tell you what I can do is I can show you on a 1 minute. It will actually show up more orange on a 1 minute, which is right here. So when you're going sideways like this is just saying not to get in it. And it works off of your moving average that you choose. And when that moving average is a smaller degree than what you should be, so let's just give you an idea of how this would work. If you have a zero line, so you're going straight across a zero, and then if you have a line like this, that is roughly 45 degrees. So when your moving average is actually in whatever degree you choose is that degree, then it will signal a long or a short depending on which way you go. So um, if you're coming down like this, it would have to hit the certain degree. Now the degrees and everything that I choose, I share, and as I use this more and more, I share more information with what works for me. We also have a Angular chat that's in my Discord, and only the people that lease Angular can enter that chat. And we talk about different settings that we can use, different time periods and so forth, and what will actually work out. Now you can trade this a couple of different ways. The 40 range works really well in the daytime, but when it's in the evening time, it's a little bit too much. 40 range is going to be a new candle every 10 points or 40 ticks. So it's kind of hard to trade that when you have lower volume, but it will keep you in the trade sometimes a lot longer. So like right here, from there is 2:01 in the morning to 3:07. So that's like an hour worth of trading, where if I put that on a 1 minute, you would have 60 candles in there, where we have what we have here. from there to there, we have 18 bars. So on a 1 minute chart, you would have like roughly 60. I think it was about an hour. So you'd have about 60 bars, and there would be a lot of chop up and down through there that would give you false signals. So I have found that the range bar works really well with this, and actually the range bar works really well for a lot of things because it doesn't give you a new bar until there is a new price, more than 10 points or whichever range you use. One person in my group uses the 80 range. And the 80 range, the way it works, I'll let you look at this 40. And as long as it's going up through here, that's pretty good. So before I switch over, I'm going to show you this. Now I trade usually, I'm usually up at about 6 in the morning, and I kind of look at it. When I see that it's got a lot of chop in here, I'm not really anxious to trade this, and I won't go to a 40 range. I will sometimes come down to a 20 range. So if I go down to a 20 range, and look at this. So we've got right here. So the 20 range would actually give me a little more opportunity. But when you're trading in a 20 range, you also have to have smaller targets. So on this one, this would have been my first short. And depending on where my stop was, I would have lost money on this one. And I'd say that probably about right here, worst case scenario is right here, that I would take a loss on it. Depends on, I usually won't let it go that far in the morning because of the volume. And then as far as right here, you can come down, there's about $200. So you're looking really for about 10 points, 5 to 10 points is what you're looking to trade. And you can also have runners with that. So you got, like there's roughly 7 or 8 points. And this one is a little over 10 points that you could have gotten. So it depends on what you're doing. And you just got to kind of look at different things. Support and resistance lines is what I trade from. And I'm going to show you that at the end of this. I have 2 different indicators that I use with this that actually helps me find out where the price is actually going. So using this on a 20 range, I will trade it usually to about roughly 9 o'clock or so. If it's not really moving like through here, I'm just not even going to trade it. And Friday, that's what I did. I just stayed out. When you start seeing that it's just back and forth, it's just not a good opportunity to trade. Now this one, you might have stayed in it and it popped back up on you. And then, because let's see, that would be 623 and 635. So you're about 12 minutes in the trade. I usually won't stay in the trade that long. As far as if it's just kind of back and forth, I'll usually just hop out. But on this one, you have 739, and down to this bar here is 751. So that's about 20 minutes worth, but it's going in the direction. If you're 20 minutes in just kind of chop, it's just not good. You're better off just take a little bit of profit or put your stop to a certain point and then just let it run. The way this indicator will work for you is the more movement you have, the better it's going to be. And as far as either up or down, if you're trading the range chart, it actually, I think, works a little bit better. You can trade this on tick or minute or whichever. The problem with a minute is you may have 100 points movement in 1 minute. Where the range, if you've got 100 points, you're going to have, if you're going to have a 40 range, you're going to have 10 bars. So it actually helps you out. So the range bars I actually like better than the time bar. So when you're coming through here, you can see that there's potential money that you can make. Now these are the max profits that you could have gotten. It depends on what you're trading. Now what I have found is that if you wait till after 8:30, so at 8:30 we usually have some sort of a news event, and if you wait on it and wait on the first move and hop in the second move, you're usually better off. So on this one, there's really no move here. You're in a chop zone right here, and then once we broke out of this and then we hit this one, then I would be willing to go long from there on. So from here, from there, your stop would be usually about 1 tick below your signal bar is usually about where you'll be, sometimes a little bit more. Depends on, like this one here, you're looking 240, so my stop would be about right here. And I would just let this kind of play out. Now, if you wanted, you could have went right there, and there's $140. So you're looking, say 5 points that you could get. If you traded this on 5 points every time it hit, then more than likely you're going to come out ahead on it. But what I would do is just keep this down here. My entry or my stop would be at the max or the minimum right here, the max right here. So right there would be $170. That's a pretty good stop. And then it just depends on how your bars are. So then when you go on up, there's a potential of 385 total, which you would not have got that because that's the max. And then where it's going up, a lot of times if you're looking at this right here, you'll see that you have a chop zone there, and they'll usually come down and retest it and go. When you trade counter trend, that's not always the best, but you could have, and if you did, you could have got that trade there. This would be your second trade that I would have recommended. And a lot of people say, well, you knew that because you're looking in the past. Well, this is how I trade. I'm looking for this chop zone, and if it's staying in this chop zone, I'll wait for a breakout, and then when it comes back down in, I take the second entry out. So that's how I utilize this to the best. But I go into more training if you do lease it. Again, this right here, you could already be done for the day. You wouldn't even have to trade in the afternoon. There's plenty of room in here. Most people that I've trained usually have a $500 to $1,000 target per day. Well, you made both of those in here. You wouldn't have even had to come over here. But you still would have, or could have made a lot more. So once you hit your goal, you put your stop a few $100s under that goal, and then keep on going. And as soon as you hit a bad trade, just make sure you're making at least your goal that you want. And as soon as you hit a bad trade, just stop. Just don't hit a second bad trade. Just take one and let it be. Move your stops tight and go from there. So on this one, you can look at different ones. Now, when it gets to the 930, I want to go to a 40 range. So let's look at the 40 range on the 930. So we're going to go ahead and delete all these out so we can look at them. But if you would have traded the 40 range, even after 830, which is really where I like to change over because you start getting a lot more volume in at 830. So if you traded the 40 range and not the 20, your potential is 580 and your potential is 1145. Your potential is 880. Now, if you'd have taken this trade right here and counter trend, that's where you would have been. This right through here is in chop. If we are going in a bullish sense, you probably want to stay bullish, but let's just say you took this, put your stop right above, then you would have lost $200, then picked up the 880. The same thing here. You would have lost 190 if you had counter trend, but we all know that counter trend is not the best. This one right here, you probably would have lost money on this. So probably not the 390. I'd say probably about right here when it's coming down, when it broke through, you probably would have lost your 200. At that point, you can decide maybe I should go short. And if you did, there's a possibility of $400. On Friday, what we did mainly, it was just stay bullish. When we're going sideways like this and this is going up, maybe you don't take that. But if you did, let's just say you took it right there and just lost another 200. So it depends on your trading abilities, what you would want to do. When this is going through, it's just orange. I would have kept my stop right there. I wouldn't have been stopped out. And right there is a potential of 1,000. So if when you keep on going through, this is only up until 10:03. Now we all know that around somewhere between 10 and 10:30, we will get some sort of a reversal or a direction for the day. It's usually between then. So when it gets when it gets close to 10, you got to kind of watch what you're going to do. We did pull back hard and we went up. Let's just say you went ahead and run the bull all the way up. There you go. As soon as you go way up, we're at 10:09. So we're about probably going to get some sort of a direction change. And that's just normal trading. Most people know that. And if you did, look here. there's money there. It just depends on how you wanted to play it. But right on Friday, we had quite a bit of chop between 10:30, and then we finally got our reversal right there. But let's just say you stayed in on this one. I mean, yeah, you wouldn't have had to, have got stopped out here. Maybe you did. When you're in this kind of chop, you're better off just to wait, and as soon as you get one move, then work it from there. But as you can see, this is quite a bit of money that can potentially be made using the Spy Money Angular. The settings, I supply some settings that work pretty good for it. We also have the histogram. If you don't want to trade the color bars, then you can trade the histogram. So let me show you a few things. Now I won't show the settings of it. That was not even the settings that you were looking at. It's on something else. But I can take out the arrows. So if you watch these arrows, they'll disappear. And then you can also change maybe a different moving average. I won't share what we're using here, but I can change it over to this other moving average. And if you watch these right here, they will change according to the moving average I have. Now see, this moving average stayed green the whole time. So what you need to do is just play with it to see what works best for you. And that particular moving average actually showed that you would be green the whole time and you would have just stayed in. There's one orange bar, but you could have had your stop right here when that hit orange. If it dropped down, you could have got out. You can also change the entry. So I'm going to change the degree and watch right here, and let's see if that candle will change color. Not that, so let me raise it a little more. So you can see them changing over in here. So let me just raise it way up and then watch right here. That one right there should change. There you go. So I changed it to a higher degree. Now that higher degree made your entry a little bit higher. So it would have been here instead of here, which is 10 points. So in your exit, if you want a slower exit or a faster exit, now watch right in here. These two right here. These will turn green and be yellow down here. See, now that one turned green. And that only thing I did was just change the exit degree. Also your bar long, okay, as far as these color bars. If you don't want the color bar, then you can change those to just where it shows the regular bars, red and green bars, ever how you want. But a lot of people like to see that if it's green, they stay long. If it's orange, they get out. If it's red, they go short. And that's what a lot of people like to see. So I'm going to change this back to my settings that I use. There we go. That's the settings that I use. And actually, I'm going to go back. Let's do one more. I think it's this one right here. Yes, this one. So that's one setting that I use. And the other one, which is if I'm just wanting to stay in trades longer, I will go to this other moving average. And it puts me in longer and it doesn't get me out. So there's less in and out. You're just staying in longer. So it depends on how I want to trade. Also, we have a sound alert. So you can change the long to one alert, the short to one alert, and the exit to another alert. So there's 3 alerts that are audible that you'll hear as it goes through. So it works out pretty good. Another thing you can do is you can change this to on bar close or on each tick. Now in historical, it won't change the on each tick. At least I don't think it will. So let's just watch right in here and see if any of those change. No, none of them change. When it is actually running live, if you have it on each tick, sometimes it won't repaint. It does not repaint. But it will show that this is, say it would show this one right here as a short, and then it'll paint it red. But if it, on each tick, if it turns and goes back up, then it will show it as an orange. So sometimes it'll look like it's flickering, but it's actually giving different signals. So what I have been doing is I will sometimes play it on each tick, but I won't trade until the bar closes just to make sure what it is. So that's how I've been trading it. Let's see, what else does this do? The color background. So right now you see one color on the background. I can change that to where it's solid. So if it's a green histogram, then this is going to be all green background. So you might want to see that. Now you can also change the opacity of it. So let's just say I wanted it brighter, which I wouldn't, but there's brighter. So it will show what it is. So you don't even have to look at the bars. You can just trade either the histogram or the background color. Or if you want, you can turn the color background completely off and it's just the chart. And this is the color bars. You can also turn the color bars off and just use the histogram. So you got the histogram here and you've got your regular candles here. So you can just trade off of this if you want. Let's say you don't want the histogram. You can turn that off too. So now your histogram is gone. And let's just say you want to change just to the color bars and that's all. So if you see green, you get in until you get the next exit. Your exit will be right here. So you can trade it that way. If you don't want the color background, you can change it to the color bars. And then if you see green, it'll go. Now I personally like the arrows. That's just something I like to see. And it just lets me know, to get in there. When this bar closes, my entry will be right here. That's where it'll be. A lot of people have asked me about a bot. I'm not sure what I'm going to do if I build a bot, but if I do build a bot, you will have to lease the indicator along with it. If you lease the indicator and you're leasing the bots, then I won't charge extra for the bot, but if you're only leasing the indicator, you'll have to pay an upcharge to get the bot just for this one bot, not all the bots, but just this one. So that's where you'll end up being. But if you already currently lease my bot, then I won't charge the upgrade because you're already leasing. But it just depends on what you want to do, and that's kind of what I'm thinking right now. But at this time, I don't know what I'm going to do. There's no definite plans of anything. Let's see, what else can I show you here? Let's do color background, one bar, and let's do the histogram. And let's go to this one here. So let's go ahead and clear all this out. And we're just going to look at it. One thing I forgot is I need to change the opacity, but that is way too bright for me. I like the bars, but I like it to be subtle in the background. I don't like it real bright. I do like the histogram though, and this is pretty much how I trade it as far as the setup. But I'm going to show you something else that will actually help you with this. A lot of people say, and well, I'll tell you what I will do, as I will show you. I'll put it on, say, 5 days. And let me just go back to a day. So I'm just going to pull it back. I don't even know which day this is. But let's go from, say, 8:30 on, because that's what I told you the 40 range actually works pretty good with. Here's the 40 range. So you know that each bar is 10 points. So there's $200 right there. There's another 200. Here's another 200. There's a 200. And then it keeps on going. It depends on how you're going to trade. Usually by 9:30 open, you're going to get the best time with it. And if you trade the range bars with the open, you're going to do better than if you trade the minute bar. And I'm going to show you the minute bar, how it looks on the chart with the minute. But you can see this is 9:33 to, there's an hour right here. There's an hour of trading. And again, I don't know what day this is. Let me look back. That's June 21st. So what was June 21st? That was a Tuesday. So again, I just randomly went back. I didn't pick a day or a certain day. But when you're going up like this, you could be done in one trade. You don't have to keep trading all day. But you know that each one of these is going to be $200. So, plus that little wick right there. And this one right here, if you wanted, you could keep trading. If it were me, I would not be taking these little shorts, especially the first one. I might have taken this one, but my stop would have been tight. So I probably would have been stopped out break even on this, probably no money at all. But usually when you run up, you'll get just a little pull up and then it'll take off. So when this hit orange, I would be looking to go long here, but it didn't do it. And since it made a lower high here, I would take that short. I wouldn't have taken this one, but I would have taken this. By taking this short, it turned out to be a bad trade, but it was based on this right here, it would have been a good trade. As far as they thought out good entry. And then we have this one over here. Once we pull back a little bit, more than likely when we get a green, I'd be going, because this is just chopping in here. And when we got the green, just make sure your stops are tight. But again, you made $1,500 or $2,000 here. Why do you need to keep trading the rest of the day? That's my whole point of most people. I like to trade usually between 6 and 9 in the morning. I like to get my trades done and out. So right here, none of these, maybe you got in a short right there. You would have stayed in here. This one right here is $1,280. I'm done for the day. You trade 10 contracts on that, it's 10,000, roughly $10,000. You're not going to get the 1,280. So maybe you go for a $1,000 target or a $500 target. $500 target is 5,000 on 10 contracts. Will this work on other instruments is a question that I've had. Yes, it will. Currently, I use it on NQ, and that is the settings that I have worked out on it. And I'm going to go ahead and start looking for settings on other instruments. But right now, this is where I have found it to work best. You need something that's going to have some price movement. ES does pretty good, and I'll show you what ES looks like. I don't have settings for ES, so I want you to understand that. But if you look back over in here, I mean, you could have picked out here and just kept taking these longs. There's money to be made on each one of these. There's money there. There was money on this counter trend, and there was a loss right here. There's a loss of 200. Right here is a loss of 200, and then you have these right here that were winners. So, you can keep trading if you want, but when you start seeing this kind of chop, you're better off just not to even trade. Just be done with it. Get your money down here. If you would have traded, right there is roughly 1,000. Here's roughly 1,500. And you had some break evens in here probably, maybe potential loss. But the very first trade for me would have been right here, and I'd been done. At this point, I'd take that trade, and I'm done. That's how I trade. So let me show you how I use it with two other indicators. I use the zones indicator and the balance. So I'm going to add the balance first. And the balance gives me levels to trade to. Now, this one right here is for the US Open. Now I can turn that off to where it's not confusing. So now it's only showing the London Open. But now when it gets to be 9:30, you want to have your US Open on. 9:30 Eastern time, that is. So right there is your balance for that. Usually when you open at 9:30, which is right here, if you open below this balance, it's going to be short biased. But usually what will happen is if you're down below it, it will usually go up and test it. And you can see it tested, it pulled back, and then it ran. So what I would have done in this particular case is I would have been looking, if I was only trading this one indicator, I would be looking to trade it to about right there. That would have been my goal. Once I got up there, I've been happy with that money. $500 on each contract, you do 10 contracts, $5,000. But you can just go ahead and candle chase. On this particular one, your stop would be right here. If it comes down and gets it, you still made money. But as it goes up, you can just keep on raising your stop up. Like your stop would be here. Each one of these, it would raise up, which is 10 points. Every time it closed above your past bar, you raise it up. So like this one never closed above, so your stop would be right there. So there's $1,345 that you would have got if you just chased the candles the way I described. So, but what we do is we look for levels. Once we break through this level, my entry is right here. My drawdown was $95. So what I'm looking for, when we break out of this, I'm looking for it to go up here. So right here is going to be where I'm looking to buy, to sell. Once it got up there, once we got here and got past that, maybe you sold it there, you pulled back and you broke over, and then when you opened on this bar, you went ahead and took another one. So there would be your entry. So on this one, let's see here, that one, yeah, grabbed the wrong one. Maybe you took profit down here, then you hop back in and you took that one as well. So when you're looking for the balance, the angular will get your entry to where you ought to be, and then the balance will be your exit that's going to be for the longer trader. Now, I'll show you the 80 range here in a second, but there's someone that leases angular, and he uses the 80 range on NQ. Now, the 80 range, he uses the 25-point stop. A 25-point stop is more than what most people can carry. So me personally, I don't like to go more than 40. I would rather scalp it all the way up as to take an 80 and be in it all day. That's just my way of trading. 80 is 20 points, and that's quite a bit of one candle, one bar in order to do reversals and stuff. 20 points is going to be $400 a contract. So $400, I don't need but a couple bars on the 80 range, and I can be done for the day. So I prefer the 40 just so that I can see more of what's going on in the charting. So right here, I would have been out actually right there. I would not have got back in until I might have got in here with a tight stop, and I would have got in here with a tight stop, and I would have got in there with a tight stop, and then it run. Once this, because a lot of times when you break through the balance, it will come back and retest it and then take off. So when I see this, I'm thinking it's going to come down to here. But as you can see, right there was our support. Right there and right there. So let me show you another indicator that I use that will help. It's called the zones indicator. And I use it on a 5-minute chart. Let's see, this one here. So there we go. So on this one, we're going to be showing, now it shows low opacity here, but when this is going through, it will look like, let me pull it back here. They'll look like these right here. See how they're brighter and you can see them? It's going to show these zones more clearly. So when this went up and pulled back to here, when it got to, I've got this set on 5 bars back. So this would be 1, 2, 3, 4. Right on this bar here, it produced this zone. And then we pulled right back down into the zone, and then it took off. So when I saw this come up, that's a hammer, by the way. When this comes up, that is a good entry right there if you already got stopped out over here. So that would be a good entry. So when I'm trading the zones indicator, and I'm trading the balance. The balance is going to be where my levels are that I'm going to be looking that it's probably going to go. I look at the balance more, I guess, more serious than I do the actual zones. The zones, I want to see where they are. But you can see we broke through these zones, and right here's our target we're looking for. And look what happened. It went right through it and come right back down in it. And now we're coming up. We're probably going to go ahead and go up to it again to probably this level here, Sunday night open, and then it'll probably gap up to that, and then it will drop. That's probably what it'll do. Now, if we look on up to see where our zones might be, we don't have any zones now based on this time period. So come Sunday night, you can change your zones indicator in order to look for a different area. So if I go ahead and bring this up, and if I put this on a different level, So we had such a run up, we'd have to go back and add more days to this. We only have 5 days, so see 40 range. If I add 20, see if it locks me up. When you go into a range bar, sometimes it's too much on it. So we are looking for up here. So the zones indicator looks way back to see where we're going. So in this particular case, let's just go ahead and go back and find out what it's playing off from. Right here. So it's playing off of these right here. So the zones indicator went all the way back to June 10th. That's what, 2 weeks ago, roughly 2 weeks. And that's what it's looking for. So right now, if we put this 40 range and put it on, say, a 15-minute or so, then we would see that this range right here is probably where we're going. But when we come back over to it, now we can see this. So when I'm looking at it, Sunday night, the balance will not be working. And with the balance not, it only works in the London session and the US session. It doesn't work in other sessions. But with it only working then, Sunday night, we're not even going to have lines for the balance. We're going to have to go by the zones indicator only. And that will let us know that, right here is good support, right there, and then right there. So we're either going to probably go run on up to here, which is a good chance since we have run this way, but we could pull right back down into one of these zones here before it runs up. So hard to say what the market will do, but that's how I trade. That's how I use all the indicators. The angler is for the entry, and I'm looking for the balance for long-term exit, and I'm looking at my zones to find out where our supply and demand areas are, and that's how I trade. I will be putting the zones indicator on my website this weekend. So if you don't see it, that's why. And I will probably do, well, I don't know if I'll do a package or not on this, but the balance indicator is already on there, and the zones will be on there soon. The angler, you can lease it now. Angler is lease only. The balance, I'm going to have it as a purchase. I've got everything on there as lease right now, but I'm going to change it back to a purchase. So when you look at it, depending on when you've looked at this video, as far as what the pricing is. But that's how the angler works. It does a very good job. I like it just for entries to let you know which way to go. And it'll also give your exits. So if you don't want to use the balance or the zones, you don't have to. You can use whatever you want, or you can just use the exit that is built into the indicator. And the exit, by the time it hits, it's going to be pulled back on you a little bit. So and make sure you get your stops in pretty good. But if you just use this for like an entry, hit your target and be done, maybe a runner, that's how you probably should use this. So if you had, say you traded 4 contracts and you took out, say 2 at one target, another one at another target, and then left a runner, that would be a good way to play this and it'll work out for you. If you have any questions, feel free to contact me on the website, and I will do my best to help out. And my website, I'll show you how to do that. I have a new website, so there's some growing pains with it. But if you go here to contact, click on that, it'll open up, and this is where you fill out your information. Fill all this in and then submit. I'm the one that gets the messages, so then I can help you. Also, if you are looking for the products, you can go to NinjaTrader 8 products. You come down here. Here's the angler, where you can get to it easy. And there's also the balance, and the zones indicator will be on there soon. Probably tomorrow on Sunday, the zones indicator will be put on there. So for now, you can lease the angler. It is a 30-day lease. It will automatically renew every 30 days. There is no purchase to it. It'll be lease only. And if you have any questions, like I said, just hit your contact. Let me know how I can help you. and I will be more than happy to answer your questions. I hope you all have a good day and enjoy the recording. I hope this is something that you see that will work for you, and I will talk to you later. Thank you.